I think the decision was terrible. Yeah. I think it's an embarrassment to their families. You want to know the truth, the two of them.
The U.S. president, jolted by the Supreme Court's ruling that sweeping tariffs are unlawful, lashes out at judges and moves to roll out new global trade barriers. Live from Singapore, this is Insight with Haslinda Amin, where we'll dive deeper into the story with crucial context and sharp analysis. Asian stocks gain as the dollar slips and U.S. stock futures fall, with the fresh uncertainty of Trump's trade policy souring sentiment. China and India emerge as winners as the U.S. Supreme Court's ruling cuts average Asia tariff rates while lifting costs for UK and Australian exporters. With the White House racing to rebuild its trade war playbook, former Trump trade advisor Kellyanne Shaw and veteran trade lawyer Claire Reade break down what can change and what power remains with the president. Plus, as U.S. Iran tensions rise, widely followed energy analyst Feridun Fesharaki will explain why he thinks prices could surge on any supply shock. Our top story today, President Trump says he'll impose a 15% baseline tariff on all global trading partners after a landmark Supreme Court ruling. While his administration is telling partners to honor bilateral trade agreements, there's already been a rush of reactions from around the world. Canada says the ruling reinforces Ottawa's position and the tariffs are unjustified. Mexico also says it's carefully reviewing the ruling. In Asia, China says it will keep a close eye on subsequent U.S. trade actions and repeated a call for Washington to remove unilateral tariffs. A top official in Japan's ruling Liberal Democratic Party called the tariff situation a real mess, while sources say Indian officials are postponing talks to finalize New Delhi's pact with the U.S. Key Trump administration officials, including Treasury Secretary Scott Bessent and U.S. Trade Representative Jamieson Greer, rushed to defend President Trump's trade agenda.
These deals are going to be good deals. We expect to stand by them. We expect our partners to stand by them. And I haven't heard anyone yet come to me and say the deal's off. They want to see how this plays out. I'm in active conversation with them on it.
We've been in contact with our foreign trading partners, and they like the tariff deals. Yeah. So they're not going to be changed. And the president remains undeterred in his determination to lower our trade deficit and bring manufacturing back to the U.S.
For now, nations including China, India and Brazil that were among the hardest hit on Trump's so-called Liberation Day are now seeing lower rates, even with the president's plans for a new 15% global levy. Let's get to our team. Chief North Asia correspondent Stephen Angle is in Hong Kong, and our economy and trades reporter Shruti Srivastava joins us from New Delhi. Steve, let's start with you. China seems to be an apparent winner in this all, but it still says it opposes unilateral tariffs.
Yeah, that's right. So the analysis from Bloomberg Economics looks like Brazil, India, China are the initial winners, if you will, following the Supreme Court's decision with an effective tariff rate of around 12% on average, which would be, of course, the lowest since the Liberation Day was kicked off in April of last year. So, again, I think there's going to be a lot of assessment of how to go forward, and especially how Donald Trump will use his other levers of influence to influence his tariff-led policies, not using the ones that were obviously ruled illegal by the Supreme Court. So we're talking in the Trade Act, sections 301, 232, also 122, which is the lever that he's using for this latest 15% tariff. So I think all these trading partners are kind of assessing what it will all mean. Maybe they already have a good enough enough deal that they've negotiated. We're talking about maybe Japan, maybe South Korea, because, again, some of the sectoral tariffs do not get removed because of the Supreme Court action on Friday. And essentially, that's important because those nations have big exports and tariffs on steel and automobiles. So, again, we have to see. India is maybe in that sweet spot because they had an interim deal to get their tariffs down from 25% to 18%, and they had the removal as well of an extra 25%. Now they're canceling, at least postponing their trip to Washington, D.C. To reassess. Maybe they can even have that lower. Anyway, we have to see how this all plays out. China has come out with a statement, the Ministry of Commerce, saying China will closely monitor subsequent developments and firmly safeguard its interests as the U.S. Adapts to this new reality.
Steve, it's still somewhat confusing because Greer did come out to say that the average tariffs for China remains at 40%. I mean, where are we with that? How is it that he's come to 40%?
Yeah, well, there were existing tariffs, that had been going back even before his first term. There was the phase one trade deal that also remained in place. Then there were added tariffs that went as high, threatened at least by Trump, as 145%. This going forward right now is uncertain where it will settle because of the essentially reciprocal tariffs have been ruled illegal. But there are, of course, separate tariffs around fentanyl. There are other tariffs around sectoral, like steel, and other ways, other avenues. So we're going to have to look at, especially as we look forward to the summit coming up in exactly 5 weeks from right now. Trump is heading to Beijing. This kind of throws into question where the priorities are going to be for the Chinese negotiators, if indeed this summit is going to be another round of negotiations for a lasting peace of the agreement that was reached in December, or whether there's going to be room for China to possibly renegotiate if they indeed, as many have said, now have a bit of more of an upper hand that Trump cannot necessarily use ad hoc, this hammer, this cudgel of threatened tariffs like he has in the past.
Shruti, let's get you into this conversation. Steel coals, India, India being in a sweet spot. Is it really? I mean, we had Greer saying that he thinks all deals should remain intact. They should be honored.
So yeah, India and the U.S. they agreed to agreed to conclude the first phase of the bilateral trade agreement early this month, and which brought down duties from a high of 50% to 18% for India, bringing a huge relief. But the Supreme Court's decision to strike down those reciprocal tariffs, now that brings a bit of an uncertainty for India. The Indian trade team, as you said, it was supposed to travel this week to Washington to finalize the pact, the legal language, etc. And the two sides aim to sign the deal by next month, sometime mid-March. But now all of those processes have been put on hold for now till India evaluates the decision and its implication for the deal. Let's remember, as part of the deal, India had agreed to offer deeper concessions to the U.S., had agreed to buy goods worth $500 billion from the U.S., and had, as the U.S. claimed, had agreed to not buy oil from Russia. This decision, what implications will it have for all these concessions offered on the Russian oil? These are things which are being studied in India by Indian officials, and we'll have to see what exactly it means. Definitely, it puts India in a sweet spot in the sense that all the exporters, they are now having a level playing field from 18% to 15% as per the U.S. administration. So let's see how this plays out.
That's been reaction from the Indian opposition party. It wants Prime Minister Modi to put the deal pretty much on hold and amend the deal. How likely is that?
Now, that's very hard to say, Haslinda, whether the deal would be put on hold for now. All we know is that right now, the administration is trying to evaluate the implications and trying to take a call on how to go about the deal. The signing was scheduled for next month. So let's see how that plays. Of course, for the opposition party and farmers who had been, citing lack of clarity in the deal and, the not safeguarding India's farm interest. Now, some of those concerns were raised by both opposition and farmers, and they had planned some protests this week as well. So, yeah, it has implications for those segments as well.
Bloomberg Shruti Srivastava in New Delhi and our very own Stephen Angle in Hong Kong. Now turning to the reaction out of Europe, the European Parliament's trade chief will propose freezing the ratification process for the EU's trade deal with the U.S. until there's further clarity on tariffs. The deal struck last year would impose a 15% rate on most EU exports to the U.S. with an additional 50% on steel and aluminum. Meanwhile, ECB President Christine Lagarde says Trump's latest tariff moves could pose a new headwind for the bloc's economy.
If it shakes the whole equilibrium, which people in the trade had got used to because they continued trading after the April decisions and the July trade arrangement between the US and Europe. But to sort of shake it up again is going to bring about disruptions in the business, for sure.
Let's get insights on Trump's tariff setback with our panel of guests. Kelly Ann Shaw is a former Deputy Assistant to President Trump for International Economic Affairs. Also joining us is Claire Reade, who's worked as Assistant U.S. Trade Representative for China Affairs and Chief Counsel for China Trade Enforcement. Kelly, let's start with you. The court's ruling obviously stating that Trump overreached. I'm just wondering, with the ruling right now, is it necessarily a win for U.S. trading partners, a win for U.S. consumers? How are you looking at it?
Sure. Well, good morning. So I have been looking at this for the past 2 days. Look, I think from the administration's perspective, this is net neutral, meaning their number one goal right now is continuity. And while they're largely trying to recreate this average 15% across the board tariff rate with these Section 122 tariffs, this is really just bridge authority that will be in place for a period of 5 months while they undertake investigations to get that more permanent tariff authority and really bake in the more permanent tariff rates. But I can tell you from the administration's perspective where things were with 20 some odd % tariffs on Southeast Asia, 10% on Western Hemisphere, 15% on allies with whom we had a trade deficit. That's where they wanted the tariffs to pretty much stay. And so I have every confidence they're going to figure out a way to effectively recreate that. So from my perspective, while there's a lot of confusion in the next couple of days and the next few weeks while we see this roll out, I think this is largely going to be net neutral in terms of the ultimate tariff program.
Confusion and chaos as it stands now. Claire, let's get you into this conversation. I mean, President Trump using Section 122. This Section 122 has never been used before. What's the key takeaway here? What should we know about Section 122?
Well, I agree with Kellyanne that the president, between his authority to do something temporary under Section 122 and his existing clear tariff authority under other statutes outside of the statute that he tried to use to put the Liberation Day tariffs and all of the other, fentanyl tariffs, et cetera, on his trading partners, he has tools that exist in his toolbox. And I think he is trying to color within the lines in using this temporary Section 122 that has a cap of 15% duties, can't go higher than that, and only can stay in existence. Those tariffs are only going to be in existence for 150 days. So he then has made clear that he's now really revving the engine on some of his other tariff tools that have been tested in the courts and will not be overturned, like the tariffs that he used in his first term against China. And by the way, China still sits with those tariffs. So that's where the average, high tariff numbers on China have come from, and where they will stay despite the fact that the particular IEEPA tariffs. That's the statute, the International Emergency Economic Powers Act of tariffs have been struck down by our Supreme Court.
So for those people who say, what legal authorities does Trump have now? How much power does he have? The answer is a lot. Is that a fair assumption, Claire?
Yes, absolutely.
So where does he go from here?
Well, there are some procedural hoops that he now has to jump through that he didn't have to when he tried to use that other statute. And that's why he liked it so much, because he could just, at the drop of a hat, put a new tariff on, and we saw him do that. These other tariffs require certain criteria to be met and certain investigations to be done. They just take longer. But I have no doubt they have made it very clear, the administration, that they're going to use these tools. And as Kellyanne said, the plan sounds like it's going to be to just get back to where we were the day before the Supreme Court, issues its ruling. The only caveat I will put is that President Trump has demonstrated that he likes to continuously negotiate. And so, trading partners need to be on the alert for him trying to reshuffle deals to get things that are even better for him if he can.
Kellyanne, we talk about confusion and chaos for companies whose goods are arriving at U.S. ports today. I mean, is it IEEPA tariffs or not? And, what are some of the considerations companies should bear in mind?
Sure. I think these are great questions, and they're frankly questions that Claire and I have likely been getting for the past 48 hours. Look, what the president did on Friday night following the IEEPA tariff decision by the Supreme Court is he issued an order effectively revoking all of the tariffs associated with those underlying national emergency declarations. So those tariffs aren't in effect. But if you're an importer right now, you're still waiting for guidance from customs. And they sent a note out to the import community late Friday night that said, look, we understand, we're evaluating the Supreme Court case right now, and we'll get back to you. So there is a bit of uncertainty right now. We're largely advising clients to continue to pay those duties. They'll likely be entitled to a refund because the Supreme Court declared those tariffs illegal. But this is all going to play out over the next several weeks and months to come. We're talking about something like $178 billion worth of potential refunds. That's a lot of money, and that's going to take a long time to work through the system. So a lot of hurry up and wait right now. We're continuing to message with clients and businesses, but we'll see how all of this goes.
And Claire, I've got to say that Bloomberg ran a story just moments ago about the possible winners and losers. Is it the right way to look at it? We talk about how China, perhaps Brazil, could be, the winners of what we saw over the weekend.
Well, for Brazil and for India, their tariff burdens come from this statute that got overturned. So for them, they are going to be subject to the new provisions. And for now, those new provisions cannot have the tariffs go higher than 15%. So with Brazil having been hit very hard and India having been hit very hard, for now anyway, it looks as if the tariffs are going to be capped at 15%, which would be helpful for them. But remember, that's just 5 months. And within 5 months, and perhaps faster for major trading partners, the administration intends to make use of another statute, the statute they used against China in the first Trump administration. And that statute, as you saw, ended up with tariffs of 125%, very, very high tariffs. It's a very flexible tool. And, so tariffs can rise. In terms of China, China has a lot of tariffs on its goods that do not come from that statute that was overturned. So those tariffs all stay in place. And, they range from electric vehicle tariffs and solar panel tariffs, which were under certain laws, to the broad tariffs across, I think some estimates are 40% of Chinese goods that came from this Section 301 statute, this unfair trading statute, which Trump used in his first term and which they're, teeing up again. So for China, it's not the same as for India or Brazil.
And Kellyanne, IEEPA eliminated. Now 301, they say, is in full view. And for the world, that could be worse than IEEPA because it is a more powerful tool that the president can use.
Yeah, I think what's important to understand is what the Supreme Court said is that the president can't impose tariffs on the basis of IEEPA. But the Supreme Court didn't say anything else about any of the other tariff authorities that have been delegated to the president. So all of these tools remain available to the administration. And if you read the fact sheet, if you read the proclamations that got issued by the White House on Friday night, they specifically pointed out that there is an existing 301 on both China and Nicaragua that would allow them to impose tariffs. There's an investigation ongoing into Brazil, which will soon give the administration the ability to impose tariffs far above this 15% cap that we have on this temporary, really Band-Aid authority until the administration completes all of these investigations. And so Section 301, the statute that the administration has announced that they will be using to largely reconstruct, it's unbounded. These tariff rates can go up to 100+%. So it will give the president lots of flexibility, provided that the president finds that there's been discrimination, and that's the basis for using this authority. It's not a national security tool, it's a discrimination tool. But I think you can pretty much bank on the fact that the administration is going to find the authority it needs to recreate and reimpose these tariffs, which is why I'm not too worried about reactions from some of our trading partners.
Kellyanne Shaw, partner at Akin, Gump, Strauss, Hauer, and Feld, and Claire Reade, senior counsel at Arnold and Porter. Thank you so much for your insights today. Plenty more ahead. Keep it here with us. This is Bloomberg. Welcome back. You're watching Inside. One stock we're watching in Thailand is Delta Electronics. It just smashed through the $100 billion market cap mark, cementing its place as one of the world's top 250 companies. It would also make it the most valuable tech company in all of Southeast Asia. Currently up by about 5.6%, Delta Electronics in Thailand. Overall, in the markets, quite a run-up for Asian benchmarks. Chinese stocks, in particular in Hong Kong, rallying after the U.S. Supreme Court struck down President Trump's emergency tariffs. The Hang Seng China Enterprise Index rising as much as 2.8%. Mega-cap stocks, including Alibaba and Tencent, leading that advance. Coming up, as Asian markets face fresh tariff uncertainty, Javelin Wealth Management's Polka Mishra will give us her investment outlook. Keep it here with us. This is Bloomberg.
We are in a period of extreme turbulence because we've moved from one regime to a temporary regime to a much more permanent regime. And especially for those Section 232s and 301s, those could be long lasting. So those might extend long beyond Trump administration.
And because it is this temporary nature, only 150 days, I think, it's to be seen whether, in this case, importers will bring a case knowing that this authority will soon expire in any event.
The U.S. absolutely has leverage, but the Chinese have counter leverage. The biggest win for both countries is to bring some predictability to the business and investment climate so companies know how to invest and they know how to plan.
Bloomberg TV guests reacting to the U.S. Supreme Court ruling striking down some of President Trump's global tariffs. Former U.S. Commerce Secretary Gina Raimondo has welcomed that Supreme Court decision. Speaking to us shortly after the ruling was released, Raimondo said the president's landmark economic policy has created a lot of uncertainty for businesses.
But I think the really important message of today is that the system of checks and balances in this country worked. And if anything, I think it makes America stronger. If anything, it gives us even more leverage in the world because it shows the world, it shows global businesses, our judiciary is independent, it enforces the laws. And, you know, you asked me in the beginning, what will Trump do? He seems to still want to go ahead with tariffs, but now he's going to have to do it in accordance with the law, which shows the world and our allies our systems are working, the judiciary is working, and we're a stronger country because of that.
Well, when it comes to China, you think about the stance of some of the other nations in the world. Mexico, for example, has already raised tariffs on China. A French government advisory panel just this month proposed tariffs on China, hikes coming from the EU. Do you see any room here for a coordinated move by the West against China when it comes to some of the overcapacity here? And do you think that that's something that you would advocate for?
It is certainly true that in order for the United States to effectively compete with China and their distorted trade practices, we're strongest when we work with our allies. I was in Munich last weekend at the security conference talking to a lot of Europeans. You know, when China subsidizes a particular product and then dumps that product into the global market, it doesn't just hurt America. It doesn't just hurt American workers, consumers, and farmers. It also can hurt Europeans and Mexicans and Canadians. And so it's definitely the case that we would be stronger working with our allies to combat the unfair, in many cases unlawful practices of the Chinese government.
And Gina, I also want to ask about what we're seeing on the domestic front when it comes to some of these multitude of companies that have filed suits against the government, basically trying to secure a refund for these tariffs. As of December, you are a board member of Costco. And I'm curious, you know, when you think about the process ahead of us, what is the kind of timeline that you're thinking about? Certainly, we saw from Justice Brett Kavanaugh today saying that this is going to be a very messy process. Is that your expectation as well?
It is. Look, it's hard to know. This came down a few hours ago. But one of my concerns about the whole way that the president has gone about these tariffs, apart from the fact that he overreached his presidential authority, is it's just created so much uncertainty. You know, and today we have more uncertainty.
Former U.S. Commerce Secretary Gina Raimondo speaking with Bloomberg's Katie Greenfield. Well, our next guest believes the Supreme Court decision is a fundamental positive that could restore some investor confidence in U.S. institutions. Let's bring in Polka Mishra, a partner at Javelin Wealth Management. Polka, good to have you with us. Why the optimism? Because when we speak to our guests, they say that it is a temporary reprieve, 150 days, and what's to come, the 301, could be worse than anticipated. I mean, could investors be perhaps too upbeat about what we're seeing right now?
Yes, but it's also that the tariffs that are in place right now, what are being put in right now, irrespective of the Supreme Court decision, it's already been priced into the market. So it was not a shocker for the markets. So markets are going more on the fundamental growth story, the GDP numbers, the economic situation in the U.S. is not bad. And then they're, of course, anticipating rate cuts later in the year. So it's not only this one factor, because this was priced in. Also, I think over the last 1 year, we've all learned to wait and watch and see what happens rather than react excessively to everything that comes out on Truth Social.
So is it too soon to be talking about winners and losers? I mean, the USD is showing weakness, and that weakness is likely to persist.
Yes, but that's not because of the Supreme Court ruling. This has been happening for the last 1 year. We expect that to continue to happen this year as well.
Could the court ruling be accelerating that weakness, though?
It could, but yes, it could. But also, the reasons for that is not because of the ruling per se. The ruling at least shows that there are some checks and balances, that Donald Trump cannot make decisions overnight, and that some systems still work. We've talked about Fed independence. We've talked about Supreme Court independence as well, and High Court as well. So that is the positive. But there are multiple reasons for which there can be that optimism and weakening of US dollar, because if the tariffs are reversed, if there is more revenue going through, does that actually bring down inflation going forward? Does that allow the Fed to cut rates? So it is, like you said, too soon, but there are multiple factors. This is a smaller factor. It's a big news item. It's a big political news item. But from market perspective, you need to wait and watch to see what happens.
You talk about how it's been priced in, but when you take a look at the winners today, the Hang Seng, the Chinese stocks, they are responding to the trade news that we saw over the weekend.
Yes, partially to that, and partially, of course, there was an increase. The U.S. markets did perform positively yesterday. The futures are down today. So daily moves are a bit... You should be ignoring the daily moves a little bit. But overall, yes, it is a positive. It is saying that U.S. cannot get away with everything. It is also telling investors to continue that process of moving investments away from the United States. It's not just driven by that. We've also seen the tech rally or the tech performance in China, the AI performance in China. We've had positive news from India. So this is all feeding into the overall thematic of moving towards Asia, moving towards emerging markets, defense in Europe, for example. So the move away from U.S., but I don't think this has triggered a significant flow out. This is just one of the many factors that we have been seeing building up in the markets the last 1 year.
So what would be a significant factor for the markets this week? Would it be NVIDIA?
Yes, I think at this stage, whatever NVIDIA does is not going to be enough. No, we will have to see how the various individual country deals get enacted. We need details on that. So we've seen Europe refusing to ratify the deal. We've seen India cancelling the travel to finalize the deal. So we need to see what those deals now mean for how they incorporate in the market, what happens with those deals. Because there's a 15%, even if that is implemented, there are also tariffs outside of that, and those deals are more significant. So that is a bigger catalyst for the market. That's what we need to look into the market, apart from, of course, what's happening in geopolitics in Iran.
Some do suggest that, before we get into the geopolitics in Iran, some do suggest that this might play out the most in the treasury space.
Yes.
How do you see it playing out?
Absolutely. That is the aspect of even the U.S. markets. It's not as much on the equities, but the U.S. treasuries, for multiple reasons. Number one, of course, less revenue increases the deficit. Number two, of course, we've seen all the tech giants come up with their debt, which is a lot more attractive than U.S. treasuries, as there is uncertainty around what's going to happen in U.S., as well as the enormous amount of treasuries that's going to be coming into the market. So that demand-supply gap definitely will put pressure on longer end of the treasury curve. So we remain short duration. The longer end of the treasury curve is most at risk in the immediate future.
So steepening of the curve?
Yes.
And what assumptions are you making about yields?
So, I mean, you never know, because we saw earlier the long-term yields were hitting 5% at one point. There are market reaction, then there are corrective mechanisms that come in place. Scott Bessent stepped in last time when the longer end of the curve was getting impacted. But yeah, anything between 4 and 5 is okay, but closer to 5 gets uncomfortable for investors.
Of course, you talked earlier about how the dollar weakness is likely to persist, and we've seen, in fact, as a result of that, strengthening of Asian currencies. How might this persist in the coming months?
So we think that trend is going to continue. We're not going to see a sudden drop in the dollar, but continued slow weakness. We expect that to happen, which also makes the job of the central banks in Asia a bit easier if they need to continue with some easing cycle. Most of them have ended. We've seen Australia actually start to tighten, but that makes life for the central banks easy. We might see another cut from India, for example. Korea's probably done, so it gives stability to the currencies, especially the ones like Korean won, Indonesian rupiah, Indian rupee, which took away all the gains from the markets last year. So that's a very big positive for emerging markets again.
You failed to mention the Chinese yuan, which has been strong, and this could push the yuan stronger.
Yes, this could, but we also think that this year is when we will see some level of easing to start. So they'll probably maintain at that 7 level, but not this cycle. Maybe in a couple of months' time we will see that. But yes, that strength, China cannot afford for the yuan to weaken too much given the trade tensions, as well as the traders piling into U.S. Markets just as a hedge.
NVIDIA, it is front and center. It's its numbers will be crucial for the markets. What are you anticipating, and what kind of movements do you see in the markets as a result?
So it's a very difficult one to predict with NVIDIA. I think when
expectations are really high.
Exactly. And
the room for disappointment is also very high.
That's exactly the problem. Whatever NVIDIA does is not going to be enough, is what we feel. And we saw that with the other tech earnings as well. We saw that with Microsoft, 10% drop in the stock. We saw that the move in the Meta as well. So the move is going to be wide. From NVIDIA, definitely at this point, we feel that however strong the results are, it's not going to be sufficient. Investors are worried about monetization. Investors are worried about where this cycle is going. If you are talking about CapEx is low means investors feel the market, the AI story is not strong enough. If capex is too high, you think when the monetization will come through. So it's a very tricky balance to strike. So we would ignore the short-term moves in this sector. We still think the AI story is strong, a bit overpriced. Yes, there is risk associated with it, but you use these opportunities more to build a portfolio rather than react to it negatively, in our view.
I'm just back from New Delhi, where Prime Minister Modi, I guess, talked about the ambitions of India's AI vision and its ambition. Are you buying into that? I mean, this has been a non-AI story for a very long time. Is it now an AI story?
I think India has a lot of room to cover before it calls itself an AI story. Effort needs to start, so it's a good, positive initial momentum. But in terms of research, in terms of investments, India is way behind U.S. and China. So it needs to bring in a lot more expertise before it shows any level of competitiveness on the global scale on the AI front.
So you are unlikely to invest in India's AI play at this stage?
Yes, we would prefer other sectors in India over AI at this point.
What would that be?
So we like consumer. We've seen, the tax cuts bring more money into the hands of the middle class, GST reforms, etc. There's more money even in the rural sector in India. So consumer sector is good. We like the financials. We continue to invest in the financials. We've seen good policy making come from India, very prudent, more long term. So those are sectors we are looking at. Commercial vehicles, maybe EV adoption is something to look at as well. So we'll look at more of those sectors and a few more domestic sectors rather than the AI story at this point.
It's unusual to have a conversation without talking about geopolitics. Iran, case in point. I mean, the markets, some parts of the markets pricing in fact, a war between the U.S. and Iran. What assumptions are you making, and how do you hedge right now?
The way to hedge is, of course, one of the hedge that we have maintained and worked well for us is gold, and that story has continued. We have added more to precious metals overall. We are looking at that space. So gold, silver, other precious metals, commodities, those are good hedges. You don't directly have to invest in commodities. You can look at markets that are more exposed to that. So, for example, Australia, Canada, you can look at Brazil. So you can look at those avenues to invest if you think gold's run up or silver's run up as well. So that's one of the ways to hedge. Of course, you never know with geopolitics because the outcomes are so binary. But from an energy market perspective, we feel that oil price is not going to spike up too much, even if the situation got much worse.
What is not too much? Are we looking at 70-ish, 75?
70-ish, 80? Because remember last time when we had geopolitical tensions, oil used to run up to 100. We're not getting close to that. It's also what OPEC decides to do. It's also a demand supply. We still haven't seen demand jump up as much, and with the new tariff confusion happening, we might see a slowdown in trade again. So that supports the oil price is more driven by the supply-demand imbalance rather than geopolitics right now. So those are short-term spikes that we will see. Yes, it's difficult to see it beyond 80.
Should we be holding more gold now, given the trajectory of the dollar?
Yes, for us, gold still remains a conviction position. Adding it to the portfolio even now, I think, given...
How much gold holding are you looking at?
It really depends on the kind of investor profile. So it depends on your risk appetite. So for conservative portfolios, we'll probably hold more. With more aggressive portfolios, a bit less.
Would that be 5 to 10%?
Yeah, somewhere in that range. Overall commodities, not just gold. But then you spread it out. For very aggressive clients, they can look at silver, for example. It's more volatile. If if you can take that volatility. It's the story behind silver is slightly different from gold. It's not just safe haven, but it is also the industrial applications. But it is forming a bigger part of investor portfolios now.
What is your conviction call for 2026?
Emerging markets in Asia still. We think that trend from last year will continue. They will continue to outperform developed markets, United States. We think that the overall economic story globally is strong despite geopolitical pressure. So we will continue to see growth. Markets like Korea, Taiwan, India, China recovery, we expect that to continue. And Japan, of course, and it's even more stable with the elections now. So these are markets we're looking at this year.
Polka Mishra, always a pleasure to have you on the show. Polka Mishra, partner at Javelin Wealth Management. Emerging markets, the way to go. Let's do a check on Indian markets as they kick off the trading day this Monday. Of course, some optimism on the back of Trump's tariffs over the weekend. He's talked about 15% tariffs for all countries, and of course that's lower than what India's been imposed with. The Sensex index in positive territory, up currently by 0.3%. We're seeing pretty much gains across the board. The Indian rupee trading at 90.75 versus the USD up by almost 0.3%. And if you're a Bloomberg subscriber, you can tune into our live Q&A on India's AI ambitions. Terminal clients and digital subscribers are invited to sign in and ask our team questions. That's happening at 4:30 p.m. if you're in Hong Kong today. Still to come, the Footwear Distributors and Retailers of America tells us how the fresh Trump tariff turmoil is hitting that industry. A conversation with CEO Matt Priest is coming up next. Keep it here with us. This is Bloomberg. Welcome back. You're watching Insight. We're keeping an eye on Asia's apparel makers as President Trump says he will slap a 15% universal tariff on all imports to the U.S. The chief of the Footwear Distributors and Retailers of America, Matt Priest, told us his industry faces confusion and is seeking urgent tariff guidance.
The conversations have been fast and furious because a lot of our members have checks due to U.S. Customs and Border Protection this coming week. And so there's a lot of tactical questions and operational questions about should they pay these tariffs or not? And can we get guidance from Customs and Border Protection, which we expect to come sometime early this week. So our fingers are crossed. But right now, we had 325 companies on our call Friday as we just outline and talk through all the different impacts that we'll see when it comes to sourcing footwear.
Is the message you're getting on aggregate, is this good news or is this bad news?
I think it's good news in a sense that it restores kind of constitutional order around which of the laws that Congress has passed actually articulate and authorize the President of the United States to pursue tariffs for a variety of different reasons. And IEEPA didn't seem to have that clarity when it comes to the actual law. But the fact of the matter is, since April 2nd of last year, so-called Liberation Day, our members have been scrambling to try to migrate maybe out of China to other countries like Vietnam and Cambodia and Indonesia. And as the dust has settled on the reciprocal agreements that have been negotiated, the rates, at least for footwear, are all the same. There was a 20% tariff in China, same in Vietnam, 19 in Indonesia, 18 in India. And so for all the movement around these negotiations, we settled on very similar rates as when we started, at least the playing field's level. So it seems to be a lot of activity to not really having a policy that surgically addresses our ability maybe to move out of China. In fact, our volume out of China in 2025 was the lowest since the Clinton administration. 49% of the volume sold in U.S. shoe stores came from China. That's the lowest since 1991, or 92. And so it's this weird environment where we've had to do all these things, and it just kind of settled back to what the status quo was.
Right, and they kept saying that the Section 122 tariffs are really intended to be a temporary fix. I think Scott Bessent said it's more of a bridge than any sort of permanent facility. What happens after 150 days? How long do you think these conditions can last, Matt?
I don't think the administration will walk away from tariffs by any stretch of the imagination, but maybe as they start to move down these other maybe initiatives or these other investigations or using these other sections of the Trade Act of 1974, that they won't focus on these low-value goods that we're producing all over the world. 99% of shoes sold in the U.S. are made overseas. And the president has said very publicly he doesn't think we need to make more shoes in the United States. And so if that's the case, maybe we have policy moving forward, even beyond the Section 122, that doesn't target items like footwear and apparel that Americans aren't making and are not looking to make anytime soon. And so that's our hope, is that maybe that is the off-ramp. It creates a little bit more nuance for the administration to navigate through these choppy waters.
And Matt, does that ask resonate as you guys lobby as far as that specific interest is concerned there in Washington?
You know, we've been at it for a long time, David, and we've been lobbying, and we've gotten a lot of feedback that, yeah, this isn't a top priority, but the president loves his tariffs, and we've seen that play out time and time again. Look, I think the president's trying to create leverage. Most presidents and U.S. trade representatives want leverage when it comes to trade negotiations. The challenge for developing nations and those that export large volumes of apparel and footwear is that this is going to be their top export, and so there's going to be leverage around those products. And so we're at this place where we hope that the administration is continuing to maybe strike some of these deals and that they provide even more carve-outs for products like footwear coming out of Vietnam, for example.
Yeah. What about in terms of refunds? I think have a lot of your members, have they been plaintiffs in this case? And what do you think is going to be the legal process is going to entail to actually get some money back?
And our hope is that with the courts and with Customs and Border Protection, that the administration hopefully will quickly avail some kind of opportunity to seek those refunds. Because my encouragement to the president and his team is that, can you imagine, the economy's doing pretty well right now. Can you imagine if you unleash that, $200 billion back into the U.S. economy very quickly and allow that to start to work through the economy, how even greater our economic growth might be. And so our hope is that they'll do that expeditiously.
Still ahead on Insight, industry veteran Feridun Feshiraki will give us his oil outlook as oil prices are under pressure amid geopolitics concerns. Plus, more insights on Trump's tariff setbacks. This is Bloomberg. Welcome back. You're watching Inside, and here's a quick check on the markets as traders digest the Supreme Court's decision to strike down President Trump's global tariffs. U.S. assets under pressure as uncertainty over Trump's trade policy dampens sentiment. Meantime, though, Japan and China are both away on holiday, but Chinese stocks have gained in Hong Kong, with Beijing among those now seeing lower tariff rates for shipments to the U.S. Oil also in focus as investors weigh the odds of a nuclear deal between the U.S. and Iran. Now, the New York Times is reporting that President Trump is leaning toward an initial strike on Iran in coming days, followed by a larger attack if Tehran refuses to give up its nuclear program. That comes with diplomatic talks due to resume on Thursday. Let's go to Dubai and Horizon's Middle East and Africa anchor, Jumana Basachi. Jumana, what's the latest from where you are?
Yeah, well, the latest is the region is still on very, very high alert, Haslinda. And you saw that on Friday going into the weekend. I think there was an expectation that maybe something could happen. And the biggest signal to that is this massive buildup of military assets that we've been talking about in and around the Persian Gulf. Just to give you some context here, the U.S. have more military assets in the region right now than they did prior to the 12-day U.S. Iran-Israel war that, of course, the U.S. got involved in. It is the biggest buildup of assets since the 2003 Iraq war. We hear of the second aircraft carrier. It's now in the Mediterranean, making its way towards the eastern coast of the Mediterranean, and ultimately will end up in the Persian Gulf. And so the deployment is there. It's ready to go. I think all of the signals of the weekend were suggesting that some sort of military action was imminent. However, there have been some remarks of the weekend to suggest that perhaps the Trump administration is willing to give diplomacy one last chance. And the Iranian Foreign Minister Abbas Araghchi was in an interview over the weekend. He said that they plan to go to Geneva on Thursday to continue with those discussions with their U.S. counterparts. But again, here we're coming back to what we were discussing a couple of weeks ago on whether Iran would actually come to the table with some of the red lines that the U.S. are insisting on. And one way that the U.S. administration think that they could cajole Iran to do that is to go for this so-called limited strike before those negotiations to encourage Iran to make more concessions, and that if that doesn't work, to go for a more sustained military action. Of course, that's speculation at this point, and that's what the New York Times are reporting. But again, a sense of heightened alert over here, a real sense that military action could be forthcoming. But at least in the last 24 hours, both the Iranians and even if you listen to comments from Witkoff and Jared Kushner, they seem to think that there could be another window for diplomacy in Geneva later this week.
So having said that, can there really be a win-win solution to this?
And that's the major question. What does the off-ramp look like? Because the U.S. has positioned so many military assets in the region at this point. How do they turn around and quite literally turn the ship around? And for the Trump administration to take something back that they can sell to the U.S. public. Now, the Trump administration have been very clear that they want zero enrichment policy. However, reports of the weekend suggest that there may be some sort of compromise brewing whereby the U.S. allow for Iran to do a token nuclear enrichment, perhaps for medical purposes, as opposed to building up a nuclear weapon, obviously. That would allow the Iranian side to posit it as a potential not full yielding to what the U.S. were asking for, and the U.S. side to say, well, look, we've stopped the Iranians from their ability to build up a nuclear weapon, but since they are a part of the non-proliferation treaty, this is something that the IAEA have referenced directly, they will still be allowed to do a limited form of nuclear enrichment for civilian purposes only. So that is the potential off-ramp if it actually does go ahead. But again, might be difficult for the Trump administration to sell back home.
Of course, we know that the deadline is between 10 to 15 days. What are we watching out for in the coming days specifically?
So we're going to watch out for how those negotiations go on Thursday. There's still the possibility, because you just don't know with this Trump administration whether they do decide to go down the path of a limited strike before the negotiations even happen. If that does happen, it would happen in the next couple of days. If not, Thursday, Friday, see what comes out of those negotiations, which would take you to next weekend, which is roughly around the 10 to 14-day window that President Trump gave. Now, I will also just remind viewers that last year, in June, President Trump also gave a similar time horizon. He said, we'll give them 2 weeks to come back to the table. And of course, they launched Operation Midnight Hammer a couple of days later. So these are not set timeframes. They're just, sort of brushstrokes of when the Trump administration may be losing their patience, or even President Trump himself may think that the window for diplomacy is closed. But again, to go back to what I was saying, Thursday, Friday, if these negotiations do go ahead in Geneva, will be key to determine what happens from here, and also the Trump administration's options and whether they go for a limited military strike or go down the route of a more protracted military presence in the Middle East, which again, Haslinda, I want to bring up, is probably not going to be something that the U.S. public favor. 2/3 of the American public are against the idea of protracted military intervention in Iran right now.
That's right. Jumana, thank you so much for that. Horizons Middle East and Africa anchor Jumana Basachi for us in Dubai. Well, the oil market is in the middle of its strongest start to a year since 2022 as supply shocks and sanctions confound expectations of a glut. Now traders are racing to cover themselves against the prospect of a U.S. strike on Iran. For more, let's bring in our oil trading reporter, Rongwei Neo. Rongwei, we see oil actually lower today, even amidst the talk of a war.
Right, so because in the past week, traders have been rushing and reacting to news as the U.S. have brought physical military presence to the Middle Eastern region. So that was the period where traders started to hedge against potential risks, potential supply risks in the event that a conflict will actually break out perhaps over the past weekend, which of course did not happen just yet. There's still talks about negotiations that will be ongoing later this week. So right now, traders are in sort of like a wait-and-see approach. A lot of them, which has hedged against these risks, has started to unwind them. There are also signs that the market has really priced in these additional risks, and that has reflected in today's prices, which is why at market, when market opened today, prices have came off slightly because all the bets that they were taking have already happened last week.
Wrong way, hang tight. Wrong way, staying with us. Let's get perspective from Feridun Fesharaki, Chairman Emeritus at Energy Consultancy, FGE Nexon ECO. Fesharaki, of course, a well-known name in the business. Feridun, good to have you with us.
Thank you.
First off, what's your take? I mean, are investors pricing in, I guess, the right scenario?
Well, if you look at the fundamentals of where the prices would be without geopolitics, the price would be 60 to 62. So we already have about $8 to $10 of war premium in the price. It's already priced in. If there is a military strike, then $5 to $10 more. If there is closures of the Strait of Hormuz, even temporarily, another $5 to $10 on top of that. But really, the market is expecting something to happen, and it's already priced in.
But is the market right? Are you expecting something to happen? Do you see a war between the two sides? We know we talk about how, the U.S. has 2 carrier strike groups stationed there. It's costing them $8 million a day to operate.
Well, the mathematics of it is pretty simple. There are 3 things that the U.S. wants. Once they want zero or limited nuclear enrichment, which the Iranians may give in to. The Israelis, which we don't talk about them, but they are the driving force, they want control over the ballistic missiles, which the Iranians are not even ready to negotiate. And they want the stoppage of funding of the proxies, which the Iranians are not going to negotiate about. So basically 2 or 3 out of 3 is no. So I don't think the U.S. has a choice but to go to war. And this limited war story, part of it is because of the congressional approval, that you go in first and then the Iranians strike back and then you have a open hand to go in. But it's very hard for me to see a scenario that they would just avoid this and turn the ships around and go home.
So you're expecting a war to happen. The deadline is between 10 and 15 days.
My guess is that next weekend.
Why?
Because, as he said, Thursday, Friday, there are discussions, and Thursday, Friday discussions will fail, guaranteed to fail, simply because of the restrictions, the way the Iranians look at it. I mean, if the Iranians accept what the U.S. says, there is no legitimacy left to the regime anymore. They have to say no. And if they say no, then there's open hand. And the pressure on Trump, particularly from people like Lindsey Graham, is just so huge. He can't say no. And when Trump came out and said that the Iranians killed 32,000 people, he put a stamp of approval on this number. I think that number is too low. I think the number is higher. So he can't just pass this on and move on.
Is there too much optimism that the oil market would not move? The last time the U.S. struck Iran, there was hardly any reaction. Should the U.S. be confident the same will happen this time around too?
No, I think that this time it will be different because the Iranians can do 2 things. One is that they can attack the neighboring countries. They can attack the UAE. They can attack Saudi Arabia. They can attack Kuwait. And these countries are the ones which have been asking for the U.S. not to go to war. So these are the big supporters. Some of these meetings about negotiations with the Iranian foreign minister is to try to placate them and say, look, you asked me to negotiate, I am doing my best, but I can't come to a deal with them. So if they attack any of these countries, the prices will rise substantially. And the other one is to try to block the Strait of Hormuz, which may be closed for 2 weeks, but they will reopen it and bring the French and the British to the war for sure. So it is definitely going to be longer lasting. And if the regime is removed, to put the Humpty Dumpty back together and get the things going, it could take a year. The oil production will fall, and there will be consequences for the global market in a substantial way.
But there is a glut out there.
But the glut is out there. It's 1 million, 2 million barrels per day. If the Iranians, the total crude and product exports are more than 3 million barrels per day. The crude exports are on as 1.75. So there would be substantial impact. Of course, you have all the strategic petroleum reserves in OECD, in China. They could release them. They would mitigate it. So I don't say that it gets $120, $150 price, but $90, $100 is within reach.
How might that impact the U.S.? Currently, the U.S., of course, is producing a record amount of shale, and that's giving it comfort. Might the U.S. also be hit by these higher prices?
Well, no matter what, the U.S. shale production is going to come to a stop growing by 2027-28. I mean, we are really running out of the stuff. So if the prices are high, it may last a couple of years longer and a bit more. If the prices are in the 50s, they would lose substantial amount of oil. So the U.S. production is dependent on the price of oil, but you can't higher prices can't make the oil in the U.S. grow faster, simply because it's not there.
So how is that factoring into the Trump administration, which really wants low oil for its people, keep prices low?
The U.S. has made it clear, Trump has made it clear that he wants prices below 60. And the Middle East countries, his key friends over there, are resigned to that. And they are prepared to do it. But his military conflict policy is going to keep the prices up, I think, through the whole of the year, and maybe longer. Because if there is a regime change, there's going to be quite a bit of problem to put things back together again.
Right, Mr. Fasharaki, just now you talked about how in the U.S. shale production is perhaps set to plateau. Now, a lot of reports seems to suggest that a lot of the meaningful spare capacity in terms of production is coming from the Middle East, and coupled with the increased, I would say, tensions or fears we are seeing of a potential conflict in the Middle East. How would you think that would weigh in on the whole global oil complex?
Okay. I mean, the Saudis, they say that they have a capacity of 12.3 million barrels per day. They are not building any more to increase it. They will just try to sustain it. Abu Dhabi will go to 5 million barrels per day, and they would stop. Kuwait has a target of 4, but that is not easily reached. The answer really is that there isn't that much more that the Middle East can do. There is not that much more. Basically, it is going to be a globally a tight market as we go forward because there are decline rates. Production in Europe is collapsing. In many parts of Africa is falling apart. So it is going to be a long-term strength in the oil price. And if you want to bring the prices down, you have to do it on the demand side, not on the supply side.
Right. So, Mr. Fasharaki, just to add on, what would be your take on OPEC's move from April onwards? There are some suggestions that perhaps some delegates, some member countries could be looking at potential output increases, further output increases. But what would be your take on this, and how do you think this would affect the entire balances globally?
I think that's a likely development in my view, but they would come in by 137,000 barrels per day increase, not a huge increase. And they watch the market. I mean, they are very clever. OPEC is very, very clever. They watch the market. If there is an impact, they hold back. If there is no impact, they keep adding to the market. And there is still quite a bit of spare capacity. They watch and make moves based on what they see at the price of oil is. But now the price of oil is impacted by geopolitics rather than supply-demand issues.
But what's the target price for OPEC? What is reasonable for OPEC?
Well, everybody, the higher the price, OPEC is happier. But the question is, actually, the more money you have, the more money you can waste. So this idea that some of the banks have, that you have to have this price to break even, this kind of calculations are fundamentally wrong. Because if you have less money, then you spend less. But I think everybody would be happy at $70 a barrel. I think nobody wants really higher prices. $70 a barrel, I think, is the long-term home for oil price and will be sustained.
If there's a war between the U.S. and Iran, where do you see oil prices? And if there isn't a war, where would prices be by year end?
If there is war, the prices could be $80 minimum and up to $90. If there is no war, the prices could be $55, $57.
What would take prices to get to $100?
Major attack on the Saudi and UAE oil facilities and some hits on Kuwait, and a big attempt to try to sink a ship in the Strait of Hormuz, scare the whole world. I mean, you can do this kind of things, but none of them can be sustained. All of them are short-term, and they would be responded to heavily by everybody. Remember, the friends of Iran and China, they don't want the oil to stop flowing to them. I mean, they are the largest imports after Russia is from Saudi Arabia. And they want those things to continue too. So nobody likes the closure of Strait of Hormuz or attack on the facilities.
So in terms of the chances of oil getting to 100%, it's what, almost nil, you think?
I think, no, it's possible, but it cannot be sustained for too long. Somewhere in the range of $80, $85, $90 can be sustained. Again, remember that there is a spare capacity that can be produced. All of these strategic reserves can be opened up right away. I mean, in the Iraq war, it happened right away. The U.S. can do it. OECD can do it. IEA can do it. The Chinese can do it. The Japanese have the largest strategic reserves compared to the consumption. They can open up. The Koreans can open up. There is a lot of flexibility in the system, but these things will make sure that the prices don't go much above 100.
Of course, when you talk about oil, it's sanctioned and non-sanctioned oil. For the sanctioned oil, how do you see the movements of those barrels?
You can't sanction oil. Sanctioned oil basically means bigger discount. But oil flows. The oil market is like a swimming pool. Take water from this side to the other side, it's still the same pool. But it is just a big discount because there will be transportation disadvantages. Nobody has ever been able to stop the oil flowing. Gas you can, but oil you cannot.
What's the biggest risk for the oil market right now?
Well, the biggest risk is whether there will be war or not. And
what's been underpriced right now?
Well, the issue of whether there will be attack. Let's say that the U.S. does what they did to Venezuela. I would stop the flow of oil out of Iran. Okay, so that kind of thing would have a big impact because you don't let the oil go out. So you can't stop it from moving, but once you stop it from coming out, you can have a big impact on the market. But these are all fear factors which are only short term.
I'm just wondering why that could be a big impact. When you take a look at Iran's contribution to global oil supply, it is 5%.
Yeah, but it is actually more than that. It is more than that. The Iranians, if you add the condensates, NGLs, the production is 5.5 million barrels per day. The oil crude production is only 3.5. In terms of exports, they export 1.7 million barrels per day of crude, but the products added together and LPG combined, 3.5 million barrels per day. So it's bigger than you expect. And please keep in mind that since 2021, Iranian oil production has increased by 1 million barrels per day. So in the middle of all this mess, oil production has gone up. Crude production has gone up. So the engineers in the National Iranian Oil Company have done a great job despite the chaos in the economy.
In the event of a war, will Asian consumers be paying a higher price more than others?
No, everybody will pay extra, but usually the prices in the East are higher because they're linked to Dubai and Oman, so they would pay a higher price, but not by that much, maybe $1 extra. The markets are all segmented, the U.S. market, European market, and Asian market, and Asians always pay more for everything.
Feridun Fesharaki, such great insights. Thank you so much for joining us on Insights. Feridun Fesharaki, Chairman Emeritus at FGE, Naxon, ECA, and Bloomberg's Wrong Way Neo, of course. Plenty more ahead. Keep it here with us. This is Bloomberg. Welcome back. You're watching Insight, and here are some of the top stories we're following. The U.S. Secret Service says an armed man was shot and killed after entering a secured area at President Trump's Mar-a-Lago estate. Agents say the man was carrying what looked like a shotgun and a fuel can. The suspect has not yet been identified. President Trump was in Washington at the time of the incident.
He was ordered to drop those two pieces of equipment that he had with him, at which time he put down the gas can, raised the shotgun to a shooting position. At that point in time, the deputy and the two Secret Service agents fired their weapons and neutralized the threat.
More than 35 million people across New York City and U.S. Northeast are under blizzard warnings as a huge winter storm brings heavy snow and howling winds. New York Mayor Zohran Mamdani has closed streets, highways and bridges to most traffic from 9 p.m. Sunday night through noon on Monday Eastern Time. Public schools are also closed as up to 24 inches of snow may fall, accompanied by high winds and coastal flooding. NASA is preparing to remove its massive moon rocket from its launch pad to fix a technical issue delaying its much-anticipated mission to send a crew of 4 astronauts around the moon. It says engineers have found an interruption in the flow of helium in the rocket. The agency had been targeting a March 6 launch for the Artemis 2 mission, but now says it won't happen until April at the earliest. Plenty more ahead. Keep it here with us. This is Bloomberg.
I think the Supreme Court just lowered the possibility of a recession by a not insubstantial percentage.
There's one thing that is relatively clear, and that is this is a tax cut. So the tariffs are taxes.
This is near-term drama for short-term players.
Ultimately, this is a positive thing for U.S. growth.
This is opportunity for nervous investors, skeptics, and bears to take some profits.
The president and Republicans in the Congress will press every lever they can.
Some of our guests reacting to the U.S. Supreme Court ruling striking down some of President Trump's global tariffs. Let's get more details now from Bloomberg Politics editor Laura Davison. Laura, put this in perspective for us, and what's been the reaction?
Yeah, so this is a huge sea change in how Trump has operated. You know, he can no longer just take to Truth Social and say that he's going to put a tariff on whatever country because he doesn't like whatever they happen to be doing. He now has to go through a much more methodical process and either justify a national security concern or some sort of unfair trade practice to be able to impose some of these more lasting tariffs. He does have this 15% tariff that will be in effect. It'll go into effect on Tuesday. That'll last for 150 days. But he needs Congress to extend that. So that means that really, a lot of countries that either if they haven't had trade deals or these trade deals aren't finalized, there's a lot of incentive for folks to wait and see what happens and if there's, what kind of exists after those 5 months run out with these 15% tariffs.
And that's exactly the question from here. And some say that perhaps 301 comes into effect, which could be worse for the world.
Yes, these are, tariffs, kind of authority in trade law that allows Trump to cite unfair trade practices. We've seen some of Trump use these other authorities in different ways, when it comes to tariffs on things like steel and aluminum, also on automobile and automobile parts. So those tariffs still remain in effect, and Trump can continue to tap that authority. But he does have to, there's a little bit more heft behind that. He has to kind of show his work, show his logic, and it takes longer for those to get put into effect. So trading partners who maybe get hit with some of these tariffs, they have a little bit of heads up, a little bit of warning. They can try to negotiate on the front end of that versus what we've seen in a scenario where Trump will literally just announce a tariff, sometimes unbeknownst to his own, top trade aides.
What happens to those trade deals which, have happened over the last 9 months? Are they still valid?
This is really the question that everyone is trying to figure out right now. The U.S. Officials have said, look, these trade deals, we still want to pursue these. We still see them as enforced, and we want the other countries to comply. But it's not clear that those will remain in effect. Particularly some for countries like China or India that have had higher tariff rates, those will go down to 15%. Those higher rates are no longer in effect. So it's really up to all these bilateral relationships to see if the other trading partner wants to continue those. We've already seen a couple trading partners, including the EU, as well as India, say, hold on, we just want to wait and figure out exactly what's going on here before we pursue this deal. Other countries, including South Korea, have said, yes, we're still going to go ahead and honor this deal. But it's really quite a chaotic situation if everybody's kind of looking out and seeing, what both the short term, what the scenario is today, tomorrow, next week, as well as what this will mean, a couple months or years down the line.
Brace, Laura. Bloomberg Politics editor Laura Davison for us there. Now, the U.S. Supreme Court's decision to strike down some of the Trump tariffs is rippling beyond Washington with consequences for India. Bloomberg has learned that Indian trade officials are postponing a trip to the U.S. that was meant to finalize an interim trade deal. Let's go to New Delhi and our economy and trade reporter Shruti Srivastava. And Shruti, India basically taking a wait-and-see approach.
Essentially, so, as you said, the two sides had agreed for an interim trade deal earlier this month. And the trade negotiators from India were supposed to travel to Washington this week to finalize the interim pact, scrub out the legal language, and finalize the details. But that trip stands postponed now. And officials tell us that they are evaluating the situation. What is going to be the implication of the U.S. Supreme Court decision on the deal, on the rate, which the two sides agreed upon? So the U.S., as part of the deal, had agreed to bring down rates from 50% to 18% for India. Does it still stand? These are some of the questions which still remain unanswered, and the Indian officials are trying to evaluate how exactly this decision is going to impact the trade deal which the two sides struck. For now, we have seen calls from opposition saying that the deal should be put on hold because there is uncertainty. The only good thing which economists have been saying is that this puts Indian exporters on a level playing field with other countries.
But the risk remains for Indian exporters because we don't quite have clarity where it goes from here.
While there is no clarity where it goes from here, one thing exporters have been telling me is that at least one thing is clear, that the tariffs are not going to be as high as they were in the past before the deal was done. And at least they will have tariffs like rest of the other countries. So this is not really a disadvantageous position for them to be in. Definitely uncertain, but not disadvantageous.
Any indication when the meeting between the two sides might resume?
So officials tell us that they are still trying to figure out the impact of the U.S. Supreme Court decision, and they will reschedule a meeting only when they are clear in what their strategy is going to be.
Shruti, thank you so much for that. Bloomberg's Economy, Trade and Investigating Agencies reporter Shruti Srivastava. Our next guest is a former Indian ambassador to the World Trade Organization, Javelin Dasgupta, joins us now from West Bengal. Ambassador, good to have you with us. What's your take? Is this a positive necessarily for India, you think?
Yes, it is a positive development for India because even if we were to assume that the trade agreement, interim trade agreement with the U.S. were to be signed, the tariffs would have come down only to 18%, plus the MFN tariffs, which are on an average 3%. Now, with this 15%, which is kicking in from tomorrow, it will be 15 plus 3. So it is a positive development, at least for the next 5 months. Now, I wanted to mention two more things in this context. One is that the lawyer who has pursued this case in the Supreme Court, Neil Katyal, he has mentioned that the Department of Justice of the United States administration had stated before the Supreme Court that Section 122 was not applicable in the case which was there before the U.S. president, which made him use the IEEPA provisions. And that is something which is going to be a problem, I think, for the U.S. administration, because Section 122, which has been invoked, speaks of a balance of payments deficit, which is not existent in the case of the U.S. And trade deficit is distinctly different from a balance of payments deficit. A trade deficit has existed in the U.S. for at least 3 decades now in terms of merchandise goods trade. So this, again, the 15% tariff that President Trump is going to impose from tomorrow, this is again subject to challenge. And if the Supreme Court decides to hear it, or if it has to go through the whole process of going to the lower court and then the appellate court and then the Supreme Court, I think, of course, that will take time. So this Section 122 tariffs are also not completely in a safe zone as far as the U.S. administration is concerned.
So, Ambassador, do you see India and other countries challenging the U.S. at the WTO on the back of that, then?
Well, the first, tranche of tariffs were totally WTO inconsistent because the U.S.'s most favored nation obligations and the U.S.'s bound rate commitments at the WTO both had been violated in no uncertain terms by having differential tariffs on countries and also tariffs much higher than the U.S.'s bound rate commitments at the WTO. And just to remind our viewers that because of the U.S.'s veto, the appellate body of the WTO, which is the ultimate arbiter, has not been functioning since 2019 for the past 7 years or so. So there is no remedy available in the WTO.
So having said that, how should the WTO respond to make it relevant given the current circumstances?
Under the present circumstances, since all countries have an equal vote and all decisions are taken by consensus, of course, there are some provisions which can lead to voting. But the U.S. has used its veto in a sense to block the consensus for the appointment of new judges. And if there were to be any decision of the WTO going against the U.S. would definitely block that also. So in the WTO, as of now, I don't think there is any remedy available against the U.S. actions.
Ambassador, if you were advising policymakers right now, what advice would you give? What priorities should they have?
I think the first advice would be to have stability and dispel the uncertainty which can bring down the flow of trade both ways. So that would be the first priority. The second would be that the U.S., the kind of U.S. action that is being talked about by different officials of the administration, taking recourse to Section 232 of the Trade Expansion Act, which is can only be invoked in the case of national security, or 301 of the Trade Act 1974, which can be invoked only if there is an unfair trade practice, which has been established after an inquiry by the U.S. Trade Representative. Now, all these things, we have to wait for a few more days or at least weeks to see which way the U.S. proceeds and what kind of action it takes. Because if it can't possibly invoke Section 232 in national security exception against all goods from all countries. That again will be struck down. And again, 301, unfair trade practice, that has to come out through an inquiry by the USTR. All products from all countries cannot be subjected to this unfair trade practices retributive tax regime. So there are limitations to what the US administration can do. We are not very clear as to which way it will proceed. So we have to wait and watch. And meanwhile, the second piece of advice would be to keep engaging with the US to find out what is there on their mind, what are the actions being contemplated by them, and to enter into a dialogue with them.
We talk about a lack of clarity, but what is clear is that the Trump administration eventually gets what it wants. In terms of India's reaction, sitting on the sidelines for greater clarity, is that the right way to go about things? Or should India seize the moment, leverage the momentum, and continue conversations right now?
I don't think, India... the government will accept that, President Trump, after the Supreme Court verdict especially, can get away with whatever he wants to. And there are these legal limitations. And of course, on the political economy front, the midterm elections are just about 9 months away, or even shorter duration away. And they are already having an impact on the minds of the Republicans who are there in the U.S. Congress. So it will not be very easy for President Trump to get a congressional approval for any tariff that he wants to impose. So there would be limitations on what he can do. And as far as trade is concerned, I think all countries would like to have clarity, and all countries would like to have the best deal possible for their country. So I think people will keep watching what is happening, be up to date with the U.S. intentions and actions, and then negotiate.
Do you think the ruling over the weekend would shape the way countries do business with the U.S.?
You know, in the short term, very short term, President Trump's rest of his term, second term, I think they will be very wary of getting into any long-term arrangement with the U.S., which will, which will carry on beyond his term. So that is one thing which I think people have to be clear about. Whatever is agreed upon will be for the short term. The second point is this midterm election, I think, will determine a lot of the actions that the U.S. administration would be capable of taking or would have to factor in while considering any action. So that is also something which countries negotiating across the table from the U.S. will take into account while negotiating.
What do you see happening during the midterm that would shape? Go ahead, Ambassador.
Sorry, I was just wanting to mention the third point. The WTO is not dead as yet, though the U.S. has taken certain steps which has made it almost completely non-functional. But whatever agreements are agreed between a country and the U.S., they are going to be violative of the U.S.'s WTO commitments and, in a way, bolster the U.S.'s stand that the WTO has outlived its utility, and so it should change tack, and instead of being a multilateral organization, it should now focus on bilateral deals and plurilateral deals. So that is what I wanted to say. I'm sorry, I couldn't quite catch what you...
My question was on the midterms. How do you see the midterms shaping the policies, the trade policies of the Trump administration? What change might happen on the back of that?
I think very recently, about a week ago or so, there was a vote in the House of Representatives, and 3 of the Republicans crossed over, and I think it was basically about the actions against Canada, the tariff actions against Canada. Now, that I don't know what happened to that, whether it went forward and was put to a vote in the Senate or not. But the point is that there is a likelihood, I'm not very sure about how much of a probability there is, but there is a likelihood that the Republicans may lose their majority in both houses, in which case the scenario changes. And there would be, of course, a considerable amount of, introspection amongst the Republicans even now. And that could have an impact on President Trump's thinking and his actions. It is not that he is living in an isolated world, in complete isolation, that he is not immune. He's immune, the criticism or actions or views of even his own partymen. That is not the case. So he will have to, I think, change his stance on various aspects, modify his stance, and move accordingly. Even in the case of the fact sheets which came out from the White House in February, after the framework agreement for interim trade agreement had been signed, he had mentioned, that India has promised to buy $500 billion of merchandise goods within the next 5 years. In the second fact sheet, it was changed very markedly to say that India intends from a commitment. So he is also not completely immune to suggestions or criticism or the points of view of the other side.
Ambassador, we thank you so much for your time today. Jan Dasgupta, former Indian ambassador to the World Trade Organization. Now, if you're a Bloomberg subscriber, you can tune into our live Q&A on India's AI ambitions. Terminal clients and digital subscribers are invited to sign in and ask our team your questions. That's happening 4:30 p.m. Hong Kong time. Plenty more ahead. This is Bloomberg. Welcome back. You're watching Insight, and here's a look at how the latest tariff uncertainty is playing out for the dollar and the FX markets. Let's get more with Bloomberg Intelligence Chief Asia FX and Rate Strategist Stephen Chu. Stephen, it is a weaker dollar trajectory from here. There is an agreement in the market, yes?
Yes, absolutely. I mean, now it's obviously about tariff, but anything that Trump's administration throw out that will cause uncertainty to the market, very clear, market will sell the dollar right now. Since last April, now market is not going to wait until more clarity. Okay, if U.S. does something, okay, we're going to short the dollar. Hence, you saw today, the dollar is weaker broadly, basically across all the currencies.
So how do you play this market, Stephen? I mean, which are the best crosses? I know for SGD, we're in a good position.
Yeah, I know, good for you. But I mean, apart from the Sing dollar, China has always been our top pick this year. Even before this tariff case, I mean, quite clear that China is one of the obvious examples that hasn't reached a trade deal with the U.S. since last year. I mean, Korea, and we have Taiwan, we have India, everybody sort of nailed a deal with the U.S. But now China has been playing very carefully. They've been waiting, trade trials, and now, of course, we know Trump and President Xi, they're going to meet. So now China has the upper hand. Everybody saw that, and they can really play slowly. So it's best for the yuan. Whether they get a deal or not, we know that the yuan is going to benefit. And even beyond external factors, if you just focus on China, we're going to get a lot more details from the two sessions later in March. But we know that China now wants a stronger yuan because they want to push for domestic demand, so they need a stronger currency to support that. Hence, yuan is probably the best choice from a risk-adjusted perspective.
So the yuan is resilient, and you talk about yuan strength. There is a limit to how strong the yuan should be given Chinese exports.
I mean, to be very fair, I think even though we get a stronger yuan, obviously China may not be super happy about it, but there are a lot of supplies that really pertain to China. So even a stronger currency may not disrupt that flow because the world will still have to rely on China on certain products. So a little bit of appreciation, a very moderate, talking about probably 2 to 3% over the course of a year, it's still acceptable for China. So it shouldn't be disruptive for exports, especially now China is still having record trade surplus since last year.
Stephen, before we let you go, of course, we've been talking about the dollar losing its place, its shine as a haven currency. Where are we with that?
I mean, to be very honest, we saw it over and over again since last April. The dollar is being questioned, dollar sell-off, but it came back in the second half of last year. Even this year, despite of the dollar sell-off, now the dollar is still pretty resilient, 2%, 3% down, looking at the dollar indexes. So, of course, all the structural factors, all the news flow favor a weaker dollar, but it's not going to crash. It's just going to drop gradually in an orderly way.
Stephen Chu, BI Chief Asia FX and Rate Strategist in Hong Kong. Thank you. Now, before we go, here's a look at tomorrow's show. Insights on the latest trade turmoil as President Trump recalibrates his signature economic policy. We'll have reaction from the Port of Los Angeles Executive Director Gene Soroka. Plus, we'll talk market strategy with AXA Investment Managers Asia ex-Japan CIO Ekaterina Begos. And that is it for Insight. Horizons Middle East and Africa is next. Do keep it here with us. This is Bloomberg.